Hello guys, welcome back to another lovely trading video. In this one we're going to be doing some analysis on Alibaba. Now the first thing we want to know is it is starting to look like Alibaba is starting to reverse and may now be switching from its downtrend into an uptrend. But the reason for this is more likely not a change in their fundamentals of the business, but the bad news out of China is starting to kind of decrease. You're not hearing about it as much. Because that's the main reason kind of Alibaba started, was just the heavy regulations you kept seeing in China kept coming in the news. But more recently, at least regulation wise, it's not been as heavy in the last month. We haven't really seen as much, and instead it's been more focused on supply shortages, which should still affect Alibaba, but it's probably less probably is going to be better that there's supply chain issues than heavy regulations for a company like Alibaba. Then the thing we always look for is where are the gap fills, and looking at the chart on Alibaba, we're not even going to bother plotting any gap fills. The reason being is it's just been non-stop gaps, and don't really know why this stock does it so much, but it does seem to be. Maybe because it is a Chinese company, maybe people don't feel as comfortable trading after hours and pre-market. Is really the only reason I can kind of see it having this many gaps, but for that reason we're not even going to bother looking at the gaps, because literally every dollar you're most likely going to have a gap fill, so it would be irrelevant to kind of do that. So instead we're going to focus strictly on the standard deviations and look, where is this telling us where is the price going to go. So right now you can see we've kind of broken over the statistical mean on both the daily and the 4 hours, so this does indicate that we are now starting to push more bullish. But the strong issue we're going to have is coming into these first deviations. So more likely than not, we will continue being long until at least $188, where the first deviation kicks in, and would also likely push up to the $200 level. Then this will be the real kind of trial for Alibaba. Most of the time, stocks don't break outside of the first deviations. And looking at this chart, we can actually see in the past year, Alibaba has not really traded outside of these bands, which does indicate at the same time that if selling pressure is coming in, it could break out of these first deviations and continue up into the second or even third deviations. And the reason I say that is you just got to look at the probabilities. With standard deviation, which is what this is, you have 68% of the data laying within these first deviations. You then have 95% of the data laying within these blue deviations, and then you have 99.7% of the data laying in between these green deviations, which is the third deviations. So on that standpoint, we could see Alibaba trading outside of the first deviation at least for a while. So that's why we're saying we do actually have a bit more of a bullish target on it, because there's more chance basically we can see Alibaba trading outside of the kind of statistical mean and the first deviation area. So saying that is 200 will kind of be that solid resistance, because it's a psychological level obviously of $200, and then it's the first deviation on the daily. So here we will more likely than not get a heavy pullback, but it's whether it will retest and break through. And if it does, we could quite easily see a push to kind of 240, 220. And then this is when I would start being a bit more, less bullish on it, but again, still not short buys, for the reason being we can see it trading outside of this first deviation for some time. We could see, it wouldn't be surprising if, let's say, 2 or 3 weeks worth of data was outside of the first deviation. So if it breaks out very quickly to the 220, the 240, it may not make sense to be getting short on it right away, and I personally won't be trading it short as it breaks out. Or may break out, should I say. But yeah, so kind of for right now is you'll kind of notice, it seems to be a pattern right now, is that kind of every $20 we're getting some sort of resistance. But again, so the key ones is kind of 188 to 280. These will be our resistance, but again, still not looking to get short until 280. When we come into the 280, then, or if we come into 280, that's when I would start looking to get short on the stock, because we are coming into the third deviation, and even if it gets there very quickly, where you still have only really 30% or less than 30% of the data outside the first deviation, it would still make more sense to be bearish on it when it comes into this level, because you don't tend to see them trade outside of that third deviation. So to me, kind of the 250 and the 286, or the 280, sorry, are going to be those key levels where a lot of selling pressure will come in and could quite easily be that reversal zones. Because as I kind of said, I do personally see us breaking through this $200 first deviation. Do expect a pullback, but do see us breaking through. And then kind of from 220 and upwards, those are kind of what I consider more pullback and reversal zones. So if it does hit into any of them, I wouldn't be surprised if we start getting reversals off those higher levels. So those are kind of our key levels on Alibaba. If it does, for some reason, end up continuing downwards, then we do have our buy targets at 122 and 120. But it's something I'm kind of staying away from. The Chinese companies is not something I really like trading or even investing in, just due to the heavy regulations. And obviously it's not like the US where it's very company run. Obviously it's more of a socialist country, or even a communist country. So it's just very risky to be investing in Chinese companies, but then that is a reason they do it a lot of the time offer high upside. So it's more of a pick and choose what you prefer to do. For me, I tend to stay away from Chinese companies, but I know a lot of people like them, so this is my analysis on where I can see Alibaba. And unless I'm day trading or doing less than a week swing trade, I don't tend to be trading these all that often. So I hope you enjoyed the breakdown on Alibaba. Hope to see you in the next one, and that's it. Peace.